Mic test. Yay, we're live. Yippee! Right. Uh, Hello, good day to all, including those who are watching the VOD, right? Um, yeah, today we're going through more, accounting questions. So I haven't seen this question yet, so I'm just gonna go through it blind, right? And well, I mean, if there are no in chat, you can feel free to, shout out your own answers. Uh, because I think the answers provided here are more of suggestions, right? So I think during the exam itself, they will set multiple different answers. To be honest, let me shift myself a little bit to the left. There we go. Right. Okay. So time now is 12 p.m. UTC. So without further ado, let's just start this lesson proper. So first thing we see a question, right? We can do either one of two things. Right, one, you read through the important information first, right? Like for example, um, when is their financial year end, which is 31st December, right? The other way is you read the question first. You understand what the question wants from you first, and then you decide what to do, right? So what they want you to record is the interest expense for the year ended 31st December 2024, including the closing entry, right? Um, okay, then we go into the specifics of what this question is about, right? So on 1st July 2023, they took out a bank loan, right, of this amount, 4% per annum interest rate. The loan paid equally over 5 years. Okay, repayment of partial principal sum, uh, and interest is to be made on 30th June every year. Okay, so what does this actually mean, right? I want to try something different today. So specifically, want to try and use a game experience kind of. So imagine you are in a something like a boss battle, right? And the boss is the loan. Boss name is loan. uh, and so on 1st July 2023, that is your turn one. Okay. Total health is 500,000, right? Let's see. Okay, everything's still in screen. Perfect. And paid equally over 5 years, right? Next turn would actually be on 30th June every year, so the next year. Okay. And we have to compute this until turn 31st December 2024. So whichever turn that is, right? So 4% per annum. Okay. To be honest, I think the interest rate of 4% per annum should be computed once a month, right? So 4% per annum equals to 4% divided by 12 is 4 divided by 12 is 1/3. Hmm. Let me see. This probably I mean it's payable per month. Okay, wait. Let me see. 4% of 100,000 times 4% is 20,000 per year. So divided by 12 is about 1,006. Ooh, okay. I do believe it is per month. Let me just take a look at the answer to make sure that I'm not teaching the wrong thing here. Where is it? Interest expense payable, interest expense. Huh, interesting. Let me take a look. Partial sum to be made on 30th June every year. Interest expense of 4%. pay equally over 5 years, including closing entry. All right. Seems a little confusing here, actually. Hmm. Let me see the answer real quick. Percent per annum times half. Oh, okay. So what the answer is saying is do every half a year. Oh, interesting. Okay. Let me see if there are enough rows in this for me to do every month. Right, so July, August, September, October. Wait, no, I can't. Seems like they do want me to do half a year. Okay. Fair enough, I guess. Okay, so let's get back to answering this, right? Due to the question constraints, they limit the number of rows I can use. So, and also according to model answer, they want me to do every half a year instead of every month, which makes more sense because every month the value will be very different. The what's that called? The value of interest will be very different. Oh, hi, good evening. Thank you for dropping by. Right. So okay, 4% per annum. So you say I think okay. So if you want to do this, then next turn will actually be on 31st December, which is half a year later, right? 2023. So imagine this as turn 2, right? Let's take a look. Okay, so the amount of interest here would be that you should recognize, right, is half of the annual interest. Why? Because, well, 1 year hasn't passed yet, right? So this is only 6 months later, right? So half of the annual interest, which is equals to half of your 500,000, which is your total health, times 4%, right? Okay. So that is, let's see, 100,000 times 4% divided by 2 is 10,000. Okay. So this is interest, it's called interest incurred or interest expense, right? We use expense. So how you could see expense is a, sort of like DOT on you, damage over time on you, right? So this is the boss damage, right? That you have to, just pay off, right? So we can write this down, 31st December 2023. Interest expense, okay, and you debit 10,000, okay, and then, well, since you didn't pay yet, right, it has to be paid 30th June the next year because we only started on 1st July 2023. So the next payment due is on 30th June? Yep, 30th June 2024, right? So this would be interest payable because you have yet to pay for, you know, pay the amount, right? Okay, so now we move on to the next turn, right? Because we're only computing interest related items. So interest expense, interest payable, and when you finally pay it, you remove cash and remove the interest payable, right? So, and it's on 31st December because this is your year end. Okay, so the question was nice enough to give you a 6 month up to year end kind of thing. So yeah, okay. To be honest, right, this is not. Well, actually, let me think. 31st December. No, okay. So this entry, right, is what you would have written if the year end is December 2024. So okay, wait. Let me see if I can. Okay. So technically, this actually doesn't really count, right? However, okay, so okay, let me explain the reason why we don't write this yet, because this is year end for uh 2023, right? Which is not what the question wants from us. Okay. Let's see if the question actually. Let me see if the answer did add it in. I doubt that they would. Let's see. Hmm. Eh? Now this is interesting. I think the answer is wrong. Oh no. Okay. Well, I guess I have to disregard the answer, just do it my own way. Well, that's unfortunate. Okay. So, right. Okay, so repayment of partial principal sum and interest. Okay, so the next 6 months in will be over here, right? 30th of June 2024. Yeah. So this is turn 3, right? And here interest stays the same, okay? So let me select this part. Oh. Is it possible to lasso this? Okay, let me try and lasso everything real quick. Give me a second. This one. Okay. Copy and paste. Now shift this down here. Right. Okay. So the interest calculation is the same, right? Because well, I mean, oh wait, why is this here? Okay, interest calculation is the same because it's still within the same year as the loan. Okay, not the financial year, but in the timeline of the loan, right? So this DOT is still the same, right? So on 30th June, you gotta recognize it. 30th of June 2024, right? Because we're only recording for time period from 1st January to 31st December 2024. Okay. So here we write our interest expense to recognize it, right? 10,000. Okay. And then your interest payable, 10,000. Okay. And on the same day, you repaid both the interest and the partial amount. So what does this actually mean? So damage to boss or damage to the loan, right, is an equal max self damage of uh 1/5, right? 20%. 20% max health, which is your 500,000 divided by 5 years, right? So that is 100,000. Okay. So you do that. So you pay off this is called loan payable or bank loan, right? 100,000. And then you have cash, right? You also pay 100,000 in cash, right? and then you paid off the interest as well. So if we recall, right, in the previous, turn in turn 2, right? So this is turn 3. Oh, I accidentally removed that. Okay. So in turn 2, you took 10,000 damage, right? And in turn 3, you also took 10,000 damage. So it's now time to just, settle that amount. So you take interest payable, right? 20,000. And then your cash, 20,000. So what this just means is you paid off the interest, right? That you have incurred for the entire year, and you paid off here, right? And then next up would be turn 4, right? So turn 4 would be actually on 31st December 2024. Turn 4, right? So now the boss current health is actually 400,000, right? So the amount of damage that they deal scales off their current health, which is the interest. And because this is only half the year, right? So it's half of the year for the loan, right? Times 400,000 times 4%. Okay, so this is essentially what the question means, right? So let's put out the calculator here. 400,000 times 4% times divide by 2, right? So that's 8,000. Okay, so on 31st December 2024, you have interest expense, right? And this is 8,000 instead of 10,000. Why? Because the bosses or the loans max health or principal has decreased by 100,000, right? So in turn, it is slightly weakened, so it deals lesser damage, or you have to pay slightly lesser interest. So I'm trying to relate the two mechanics here. See if it clicks with more people. So interest payable. Why is it interest payable? It's because we have not paid yet, right? We just took the damage and just left it like that. Okay, and honestly, I think that is the answer for now, because this is the last date that we are concerned with, right? And the first date we're concerned with is technically 1st January 2024, but nothing happened on that date, right? Because the event was on 31st December instead, which is the previous year, right? So that is how I would tackle it. I could be wrong here, so please let me know if I'm wrong, right? I'll probably clarify as well if I made a mistake here, right? Okay, so part B, we gotta identify how they will be classified for online clothing retailer. So this is important to know which business we're looking at, because the way they classify certain assets are different depending on what business they're in. So for example, let's think of something. Right, a car dealer, right? Car dealers, they mainly sell cars, right? They buy and sell cars. So inventory wise, motor vehicles are their inventory, right? A taxi, however, taxi company, right? They use these cars as a form of, to generate taxi fees, generate that revenue from there. So these cars are actually considered non-current assets, right? Because they use these cars for a very long time period, preferably, right, to generate that income over time. So instead of, one time buying and selling cars, they are keeping those cars, and they are trying to, they're using it to generate more money for themselves, right? And then we have one final one, which is, car investors, people who collect cars in the hopes of selling those cars at a higher value in the future, right? Those will be considered investment properties, right? They're still considered non-current assets, but the treatment for investment properties will be very different from how we would treat, a normal non-current asset, right? So it's important to determine, number one, which type of business they're running in order to determine the way you classify certain assets. So for example, delivery van, right? This is a non-current asset. Why? Because non-current just means that you intend to use this for more than a year, generally, right? In the official definitions, they didn't say more than a year. But it's like a kind of like an industry decided time frame that we think is reasonable, right? Current asset would just mean usually less than a year. So assets that you intend to convert into something else, maybe a different asset, right, within a year. So okay. And the same will apply to liabilities. So anything that you owe for more than a year will be considered a non-current liability. Anything you owe for less than a year is considered a current liability, right? So loan due for repayment in 3 years will be considered a non-current liability, right? But you do need to note that of this loan, right, if it is paid over a period of time, the next payment, if it's within a year, you consider that portion. So you need to split. You consider that portion as current liability, and the remaining portions that are due in more than a year as non-current. So you gotta split it into portions, where applicable, right? So split if multiple repayments, right? Oh no, what happened to my spelling? Repayments. Okay. Inventory of clothing, you intend to sell relatively frequently, right? If you go to a clothes store, like a generic one that you get your own clothes from, you wouldn't expect them to keep the clothes there for more than a year, right? That would just mean that the business isn't doing too well, and that, either that or like the clothes are not that desirable or something. The only exception would be luxury clothes, but even those usually they'll sell within a year, right? So normally you expect those to be current assets under inventory, right? So that's why we do the classification as such. Okay. Interest on loan payable annually. So annually means that it's once a year, right? That means it definitely is due within the year, right? So this is considered current liability. Okay. Okay. So finally we come to the last part. Today is quite short as well. Define the following terms: asset and liability. Okay, so this one we have a few definitions, right? The one I'm referring to, the O levels one. Let me see the answer. Hopefully they don't have anything wrong with it. Where is it? Oh no, where did it go? Ah, okay. So resources owned by business, they're expected to provide future benefits, right? So this tackles a few things, right? Number one, there's ownership, right? And number two, there's future benefits. Okay, according to answers here, right? Liability is obligations owed by the business. Owed meaning, um, business is liable for it. So I think it's more of like a obligation, right? So obligation to pay in the future, right? They're settled in the future, right? Obligations of mm, outflow, I guess. Like future, not really benefits, more like costs, right? So outflow, cost, yada yada. So for official definitions, you can probably check your own what's that called? Accounting standards, right? They will usually set the definition out very clearly. In fact, let me check the one for Singapore, since this is the location that these exams are held in, GCE O levels. So I'll just check right now. For Singapore, it's just Accra. No, it's not yet. SFRS. I just check SFRS instead. SFRSI. Yeah, it's under Accra. Okay. This one? Let's see. First time adoption, no. Presentation, I think. Let me see. Yeah, so I'm just gonna read through the SFRS defined terms. Actually, it might be easier if I just check the definition of certain assets. I think there's one for inventory. Let me see. Business combination, non-current asset held for sale, yada yada. Financial instrument, lease, where's inventory? Okay, found it. Okay. Where is this? Definitions. Preface, no. Objective, scope, definitions. Apply to all inventories. Okay. Okay, so alright, it's not in inventory, so I'm just gonna check the other one. Sorry, I'm not very used to reading this very much. I'll get better one day, I think. Actually, let me just... No definitions. Oh dear. I'll just... Is it this one? Statutory board, yada yada, financial reporting framework. Let's see. Not first time adoption. Where's the financial reporting framework? It's not there. Wow. Is it under interpretations? No way. Where's this one? Oh no. Okay, you know what? Let me just use the summary, I guess. Or maybe ACCA. Let's see, do they have it? Oh yeah, okay. I'm just gonna use the ACCA one instead. So ACCA, they base it on IFRS, so International Financial Reporting Standards. That is very similar to the Singapore version, SFRS. So I'm just gonna use IFRS instead since it's more straightforward. Okay, so let me assets. Liability. Okay, so these are the two. Oh, actually, yeah, I'll just put all the definitions up here since it's all here actually. Let me just capture this. Right, so this is taken directly from the ACCA website, right? And they have sourced it, right? They said that it's from the... Okay, they said that this is from International Financial Reporting Standards, so yeah, I'll just use this, right? So for countries that are not using similar standards, right, then you gotta check with your own country's accounting standards, right? For US, I believe it's GAAP, right? So Yeah. So what can we understand from this? Because for now it's just a bunch of words, right? Present economic resource. Present means that uh you have it, right? Present means current, right? You currently have control. Control is it's relatively subjective, right? So control, they will have defined it in other places as well. So usually it just means you have the right to use. The right to use, the right to also, transfer to a different person, right? So that is, if I remember correctly, that is what control means. Controlled by the entity, meaning the company, as a result of past events, right? So if you can remember my previous explanation, criteria one, history, meaning somewhere, somehow you managed to obtain control of this asset, right? And then number two, it's a future um, benefit, right? Future benefit. Why? Because you aren't gonna really hold on to like just an asset and just leave it there, right? You will want to use the asset to generate more, income, more assets, right? So that's why number two is implied, right? Okay, then for liability, it's just the opposite, right? Present obligation to transfer economic resource. Usually it's an asset, right? As a result of past events. So somewhere, somehow you incurred this. And so instead of future benefit, it'll be future, outflow, future loss, future cost, whatever you want to associate with it, right? Future loss of asset, whatnot. Equity is residual, right? After deducting all its liability. So this is why I say equity is just um, not liability, right? In terms of accounting equation. So to be honest, I think accounting equation should be written like this instead. Equity equals to asset minus liability, because that is the literally the definition of equity, right? But I mean, they want to do A equals to L plus E, which is the same thing, right? Just visually different. So income is describing increase in asset or decrease in liability, right? Okay, result in increase in equity. This is okay. Other than those relating to contribution. So what does this mean? This just means um increase in asset or decrease in liability, not due to investment, or um actually just not due to investment. Yes. So this would just mean, your day-to-day activities, and also if you lend out money, right? If the company lends other people money, they earn interest, right? That will also be considered under income, right? So expense would be the opposite, right? Increase in liability, decrease in assets that result in yada yada yada. So this one just means decrease in asset, increase in liability, not due to investment. Again, right? So that is just the definition, right? Hopefully this clears some things up, I guess. Okay. So let's just do a recap, right? So today we learned how to do what they call amortization tables. I'll do a full video on it some other time, but for now I think I'll just run with this, where it's just a boss fight where the boss has a total amount of health. The damage that it does, which is interest, right? Is dependent on their current health, right? And then the frequency of their attack is you can kind of set it yourself. Here is set at half a year because we don't have enough space to write every month, right? Technically you could write it every month, yes. And then when you finally pay, you pay off the interest, right? And you also pay off what is that called? You also pay off part of their health. So what this means is, okay, maybe instead of damage to players, let me erase this. Oh, oh dear. Okay. Let me erase these two. Maybe instead of that, we see it as a boss health, since we're gonna be dealing that damage later, right? So we call this a shield for the boss. Like boss generates shield based on their current health, right? So and then when the time comes for you to deal damage, you gotta deal slightly more damage. So you pay off for both interest and you pay off for part of the principal, right? So that's how I can see it. Again, I'll do a more detailed explanation. I'll probably post it. I think I could post it as a stream, but because I'll be busy next week, and I think yeah, I won't be free to actually stream uh next week. So I will pre-record, right, and then I'll post it as a stream. So I will probably say this is not live. This is not live, but I'll still stream it, right? So it's on the record and all that stuff. But yeah, so this is one of the explanations that you can use. And the reason why we only wrote this much, right, for the entries is because, well, the time period that they gave you was for the year ended 31st December 2024. So anytime from 1st January 2024 up to 31st December 2024. Okay. Then the second part was just classification of current, non-current asset or liability, right? So just 4 categories for now. And then finally, they asked us to define the following terms. And I want to, okay, let me write on top of here. This one is from ACCA website, IFRS, right? Which is taken from IFRS, okay? So, from ACCA, taken from IFRS. Okay, so ACCA, for those of you who do not know, is an kind of like an international organization, right? They provide certification for accountancy, right? So if you want to pursue this, if I'm not wrong, you can convert to masters once you reach the highest level of their course, right? If I'm not wrong, you just need to write a dissertation to convert it to a master's. Or if you end up completing the papers in like the second tier, you can convert it to a bachelor's. Again, you still have to write dissertation, but I'm not sure if it is still the case right now. So this one you need to do your own research. Back when I took a few of their papers, that was the case, right? You could convert. I'm not sure about now, but again, it's pretty recognized, I think, anywhere, to be honest. And yeah, that is the end of the stream today, right? So if you have any questions regarding any part of the stream, feel free to type it in the chat. I'll stay usually 5 minutes after I've completed my lessons. So yeah, I'll still be accepting questions, right? So again, thank you very much for making it to the end of the VOD/stream, right? Hope you have learned something from it, right? And if you don't understand anything, right, number one, know that it's perfectly fine. We all have our own ways of learning, right, understanding things. So feel free to either approach me or approach your tutors or approach the internet, right, to get a clarification. Just make sure that you check with your own accounting standards, right, regardless of where you are. So because accounting is slightly different across different countries, right, unless you adopt the international standards, then you just refer to that one, right? So if not, every country is slightly different. And the issue of teaching accountancy is you won't know what the difference is if you're not from that place, right? Unless you've studied it specifically. So right, this is the difficult part. But generally, the principles that govern the whatever standards should be similar, right? Other than that, let me think. What else should I add in? Oh yeah, and also some of the explanations that I gave is built on past content. Usually I'll rehash it slightly during my explanation itself, but the detailed explanation would have been made beforehand, right? So it might be more worthwhile if you check them out as well. But if you're okay with the simplified explanation, then feel free to just use whatever that I give in each session, right? My goal is just to really break it down, right? For these sort of questions, it is mainly me going through it blind, right? Looking out for potential traps that the examiner might set, um, and explaining to you why certain things are done uh, as such, basically, right? So again, uh, my explanation for the interest this time round wasn't as good for me. So I will actually record a proper explanation, probably using the same question because actually I could just come up with my own scenario. Yeah, that doesn't really matter, right? So I will I will do that, and then either upload or stream it. But yeah, it won't be a live presentation from me. It'll just be pre-recorded. So I will indicate that it's pre-recorded as well, right? Other than that, okay, it's been about 5 minutes. I've not seen any questions yet. Let me check. I think yeah, okay. So no questions whatsoever. I shall just end off for tonight, right? I do believe I'll be going on to game in tonight, right? So just look out for that in a little bit, right? Okay. Other than that, thank you very much for watching. I'll see you somewhere. Bye bye.